The market continues to head higher into the end of the year, and it looks like we may even get a new all-time high, maybe even this week. And at this point, over the next few days, you're going to hear a bunch of people telling you that this is a new bull market. We are going to head higher. We have a new all-time high, and we have more room to the upside. Everything needs to be invested right now into all these companies. And I'm going to tell you right now, do not be fooled. And I say don't be fooled because all of this upward move is based on the fact that we are going to get some rate cuts, but we've been told over and over again that that is going to be 75 basis points. And as of right now, it looks like now we were pricing in 150 basis points, but now it looks like we're going to be pricing in 175. And we are not going to be getting 175 basis points in cuts next year, according to the Fed. And I believe on January 3rd, we're going to see a snap back to reality. Oh, there goes gravity. And that gravity may just be a big drop that actually starts us into a bear market, into the crash of 2024. Today, we're going to be doing some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and Nvidia. And I really just wanted to point out before we get started on that stuff that the FOMC minutes is January 2nd. That is Tuesday, January 2nd. We will be getting the FOMC minutes, and that is going to really shake up this market as we are pricing in way too many rate cuts. And the only thing I have to say about that is, if we're pricing in that many rate cuts, it's either the bond market is telling us that something is going to go really wrong, or the Fed is going to snap back to reality and give this market exactly what it needs. It needs to pull down to lower levels because we are pricing in way too many rate cuts, and we're not going to get those in 2024, according to the Fed. If you're a part of my Patreon, I actually did update you guys on this. I really think this may be the final push into the end of the year to create some all-time high, get all that FOMO in, tell you that this is a new bull market, and then they're actually going to rip this away with Jerome Powell, the FOMC minutes on Tuesday. So I really want to pay attention to this. It looks like we're on the 2-hour here for the SPY. We do have those weekly ranges up. I did post those in a little post. Hopefully you did see those on YouTube. A little busy this week, but you can see that to the upside, we have 480.11. To the downside, we have 467.19. We're outside of that monthly expected move. That'd be the yellow lines here. So there is still a chance that we do see a significant drop and come down to these levels, but it really looks like to me, we are going to head up and create some kind of all-time high to get people really into this move, to really believe that this is a new bull market, and then we are going to see the rug pulled coming January. And we can see this forming right in front of us. We can see the 2-hour, and I like the 2-hour because if you see these divergences on the 2-hour, it likes to roll over that daily, okay? So the daily can see that turn around, and we already went over the weekly over the weekend a couple times. The past few weeks, we've been going over those weekly charts, showing you how a crash can really happen in 2024. And if that daily is actually going to roll over and give us some kind of big pullback, some kind of bigger crash, actually, I believe that prices will move pretty rapidly to the downside coming next week, then we could see those weeklies cross, and that signal itself, if it's able to get into negative territory, will be some kind of downfall. Now, I really just wanted to show you guys how the 2-hour is looking at this point, and it looks like we're about to set up some kind of third point for that triple divergence. Triple divergence is very strong. We may be heading up into an area up in here, right around that, maybe even 484. I'm more leaning towards a 480-150 level, and then we could see that rug pulled next week. Qs are continuing to make new all-time highs almost every day, okay? So we're coming up into this last point, this trend line here. Maybe we even do break through that with that bullishness, with that all-time high narrative, with that bull market narrative, and we come into that resistance right at our expected move. So the weekly expected move to the upside that I'm paying attention to is 415.40 to the upside on the Qs. And I do believe that once we hit that level, maybe even into next week, we do see a little bit of bullishness, but I believe Tuesday, we are really going to get a wake-up call and be, pushed back down with some gravity to the downside. Now, where this could hold up, I really think this level in here will be very important. I still think there is a possibility to get another push higher, but with this all-time high narrative, this could just be some kind of dead cat bounce around the 50 here to then head to lower levels. So I really need to pay attention to this level. We're going to update you on that stuff as it does come to fruition, so we'll go over that. But you have a very, very high probability of prices moving lower over the next month. On the 2-hour, this is really what I'm paying attention to. You see this divergence forming again here on the 2-hour. We can see this downward move here. We got that selling, but guess what? The algorithm said it's not time yet. This is manipulation. And we're going to see manipulation to get this to go to all-time high to get that narrative going. I really believe that's going to happen. I think we're going to see this MACD curl up, give us a point of divergence, and we're actually going to see that play out into about Tuesday next week. So I'm really paying attention to these signals. I wouldn't even be surprised if we, jump up to these levels and we come back down into the monthly. So really pay attention to this monthly as we are heading into the end of the month, because we do land within here 68% of the time. But right now, really pay attention to these weekly moves, because we could see a move up out of this, create another point on that divergence, and then end back inside this weekly expected move, which we do end in this 68% of the time. So it's just something to pay attention to. People are going to be telling you some very bullish things. People are going to say this is a new bull market. It is not, okay? This is not a bull market at this point. I really think that we are going to see prices head lower because we are pricing in way too many rate cuts. Now, Apple, we did have a wedge in here last episode, right? We did have a wedge in here that looked like it could break out to the upside, but that actually broke down, right? So we're breaking down. You have to ask yourself, if the Qs are heading higher, the SPY is heading higher, and Apple is one of the most popular stocks, then why is Apple not participating in this move at this point? Now, the fact that Apple hasn't participated doesn't mean it can't start to participate into the end of this week. I really think Apple actually will catch a bid, maybe even come up and test some of these highs up here before the week is over. So I'm really paying attention to this. Maybe this sets up some kind of lower high in this area, but I think Apple actually could get some kind of push in the end of the week to push the SPY higher into that all-time high and push the Qs higher into its trend line, into its weekly expected move by the end of the week. So as of right now, we could see this playing out in multiple ways, but you see a little bit of structure in here. We have a left, we have a head, and maybe we come and form a right shoulder and we go up and touch this trend line. So that would be kind of a bullish take on Apple for the short time. But overall on Apple, we have to flip over to the daily, because if this daily isn't able to fully roll back up, then this divergence will still be happening, right? We noticed this divergence for a while now, and we said Apple looks like it's going, and I told you way up here, right? We told you on this bar when it did cross that it was looking like Apple was the only stock that was showing me it was to the sell side, right? It was giving me the sell signal. It was telling me, hey, you need to be bearish and flip your hat on Apple. We see the divergence between these highs. We see it up here, and we see it on the R side at the same time. And that is a very strong signal. So we expected some kind of downturn. And I'm going to use Apple here to show you guys that weekly real quick, okay? The weekly here on Apple, you see this big divergence, and it's right by that negative territory. You notice the last time that we did get into that negative territory, we saw dramatic selling, and then we got a big run, right? We got a big dead cat bounce, a little bit of a short squeeze, and then we are still remain in that negative territory. We curl back over, and we see dramatic selling again. And I believe if this does roll over, that does confirm on the weekly chart, and we get into negative territory, that's going to happen again, and we're most likely going to come test this low. So it is a very good time to be cautious in this market, even though a lot of people, maybe like Jim Cramer, if you guys watch him, he might be telling you this is a great time to invest. I actually looked up one of his videos today, and yes, his last night's video was telling people to invest in stocks. And I'm telling you right now, that is the same thing he said right here. That is the same thing he said right here. This is a time to be very cautious in this market, because you have setups that could lead to a big crash in 2024. We notice this too. If this is such a strong move, then why is Amazon not participating at this point? Amazon is still not participating. Now it is looking like it has some sort of consolidation up here, right? Reconnecting with that 9-day moving average. And maybe this is what actually Apple, Amazon stocks like this actually do produce some kind of greenness to come up into the top side of its channel. And then we see the SPY reach that all-time high. We see that FOMO come in. And next week, we kind of get our eyes opened by the FOMC minutes. They are not going, they're pretty honest. I have to be honest about that. They actually do what they say most of the time. They said 75 basis points. That's what they're going to do. And if they say they're going to cut by more than that, that is most likely them signaling that something in the system is breaking and they have to lower those rates, or else the whole thing is going to go down. Where could Amazon be heading if we do see that downturn? I really think it has a good shot to head a little bit higher, maybe come up into these points up in here. If you're part of my Patreon, pay attention to those weekly expected moves. But I really think we're going to see Amazon drop pretty quickly down to its 50, meet up with all of this liquidity in here. And then we have to see, is this going to be some kind of basing out in order to go higher? Or is that going to be just a right shoulder to really break us down to the bottom of this channel? It is a time to be very cautious in this market, even though a lot of people are bullish. It's a time to be cautious. That's all I can keep saying. Tesla, we were talking about this. If we did start to break out of this structure and we actually cut above this high, we're most likely going to go test the top side of that big triangle we've been in. We've been in this triangle for quite some time. You can see that. And every time we get to the top of this triangle, guess what? We see selling come in. We get towards it, we see selling come in. If we go way back, right, we can go way back on this and see once we touch that point, we see selling come in. We see selling come in. So this is a time to be very cautious. Sure, this can break to the upside, but I believe if we do see some kind of break to the upside, that is going to be a fake out, and Tesla will have to come down as well. Now, Tesla is still within that triangle at this point, so it's not a time to be overly bearish. We still could see a drop down to this level and see that base out, and maybe we are able to see a push out of this zone. That would be a good sign for the bulls. But as those weekly charts on all the other stocks are looking very poor at this point, we could see this actually break to the downside and cut below this low in 2024. Nvidia, one of the most popular stocks out there right now. I really do believe in Nvidia, but overall, sorry, Nvidia, you are still a part of the chip bubble. We have like 5 bubbles going on at the same time. We have debt bubble. We have all kinds of things. Debt bubble is probably the most important at this point, and you can see how we're setting up pretty much at this point of barely a lower high. So we could see this actually break down to lower levels. I'm still looking at this zone in here for some kind of bounce or some kind of turnaround, but I really think as we look at those weekly charts, it's looking very bearish for 2024. Maybe Nvidia is able to participate late in this move, create a new high up in here, and then get people really excited. And then we see that rug pulled next week as we do get snapped back to reality. Now, the point with Nvidia here that you can pay attention to, if we do go make a new high, you would have that divergence up here. So you'd have a divergence on the daily, you would have that divergence on the MACD and the RSI at the same time. I just showed you that on Apple a few minutes ago. How did that play out? It went down, and that is when you need to be cautious, and this is a very good time to be cautious in this market this week, as we will be getting FOMC minutes, and they usually do not, differentiate on their comments, right? So they told you 75 basis points. The market is pricing in almost 175 basis points at this point, so it's something to pay attention to, and we are going to see a drop if that information is not changed. I don't think you have big probabilities of this happening, but if we do see some weeks of buying, then you will be setting up some kind of divergence, and maybe Nvidia falls a little bit later. I don't think that's going to happen. I actually think we are going to see this not be able to curl up, and we are going to see this reject and maybe even get into negative territory, breaking below all of this. And we talked about this in the past, how we really went pretty quickly up from this area. This is actually a gap up, right? So if we do break below this point of about 375.20, we can drop through that really quick, right? And then head for a level down here, maybe around 273. So I'm just telling you right now, we could see Nvidia head to 273 in 2024 pretty quickly if these signals do play out. And I believe they have a very high probability of happening. So pay attention to it. Nvidia is a great stock, but I believe that you are going to be able to get it very cheap in the near future. When it comes to rates, we were talking about this bounce, and we really needed people to start to price in some kind of probability of those not as many rate cuts, as the Fed is still leaving those rate raises on the table in their speeches. You can really see how we're going to pop higher. But we didn't see that happen, and I told you, if we start to break below this trend, it is a very bad sign. It means that we need these rates to come down, and when you need the rates to come down, that just means that something in the system is not healthy, and it is very, very dangerous for the stock market. So this is happening right now, and since it's happening, we're paying attention to it. Now, if this is able to catch a bid and come up, we still have a chance to head higher in 2024, actually. We do. But considering the fact that this is breaking below this level, and considering the dollar, we were notifying you and we said this is going to be very bad if the dollar breaks below this level, it just means there's some very weird things happening in the market. And usually when it's something that's unknown happening in the market, that's when you should be the most fearful. It's like jumping into a lake at night. If you jump into the lake at night and you open your eyes underwater, you're going to get pretty scared because you can't even see what's happening beneath you. The VIX is closing below its moving averages again, and this is exactly what they want to happen at a top. This is exactly what they want to happen at this point. They want all the volatility to be sucked out. They want all the fear sucked out of the market right before it is ripped away. I really think we are going to see a pretty significant drop in January and in 2024, and it might just be the start of a bear market, because as we look at the weekly here, if this is going to make a move down and we still get that bearishness throughout January and we do see the VIX make a move higher, this has the opportunity to get into a positive trend. And we can just look back. The last time we were in a positive trend for the VIX was I would say right here back in November 22nd, 2021, we saw that big rapid move in the VIX, and then we saw us remain in positive territory with some volatility for a long time. And that is what happens in a bear market. So I do believe the VIX is going to make a big move higher, and I think we're going to get a reading in the VIX of probably 36 in 2024. So if we get up to those levels, it's a good chance that we're going to see us remain up in this area and see that positive trend on a weekly on the VIX, which just tells you that a bear market, some kind of crash is coming. And bond traders are telling you that something is not healthy here. You can see the weekly is very strong. It's starting to creep into positive territory, and that might even keep going with some fear in the market. I think people will start to run to safety. Now, TLT could back off with the Fed's statements, right? The FOMC minutes. We could see that actually back off as they do, tell people, hey, this is going to be 75 basis points, not 150, not 175, just 75 basis points. So we really have to pay attention to this at this point as TLT is getting into positive territory. So are these bond traders, after that speech comes out, are they actually going to sell? Because if they do not sell, that is them kind of telling you, hey, the Fed is actually making a mistake here. They need to lower these rates, or the economy or the stock market, everything is going to go down. So if they are going to push higher from here, then you would really say something in the market is sick, and we don't even know what that is at this point. So this would be a very bad signal for 2024. The main takeaway from this video is I have a little different tone today because I am genuinely worried about the stock market, and I don't want you to get caught up in this mess. It is a point in time to be very, very cautious, and we're going to see some very bullish things said over the next few days. I really believe we will, and I don't want you to give in to those lies. Thank you guys so much for watching. I really appreciate it. I know I took a couple days off, but I am back. I will be working a little more often, so I'd really appreciate it if you showed some support for the channel. You can donate, but also there are free ways to support the channel. All you have to do is, if an ad pops up on the channel, just go to the bathroom, go get a glass of water, let that ad play for a little bit, watch the video all the way through, and I really, really appreciate it. Thank you guys so much. I wish you all the luck in the world trading. Stay safe out there, manage your risk, and have a good night. Peace.